To reach Esther now, call 803-0930. Toll free at 1-800-616-9236. And cell calls are free at star 930. And now, live from the WBEN studios, it's Esther Gulia.
Hey, everybody, this is the Tax Lady, and we're here to talk taxes for the next hour. So if you're sitting there at your home computer struggling and you've been waiting all week to talk to me, now is the time to call. 803-0930, 803-0930, star 930 on a cell phone, and joined in studio with me is Tiffany Fabian. Hey, Tiff.
Hey
it's
there,
good
Esther.
To be out there, isn't it?
Oh, very, very good. Very excited.
All right, so we know stuff to tell you that you may not be aware of. First of all, not many people, but some people are going to find that they're getting audit letters and they just filed their return.
Correct. I know, for example, 2 of my clients have given me letters from New York disallowing the Empire State Child Tax Credit. And so often you think to yourself, well, it's from New York. It must be right. But it's not right. So make sure you follow up or call us or do something of that. But don't pay it without a second opinion.
So here's the thing. If the state or the federal government has sent you a letter and says you're under audit, then what you have to do is prepare to answer the questions that are on the audit. For instance, there is a lot of fraud that has gone on in the past with tax refunds, and people go, how can fraud be? Are they making up figures? Well, what they do is if people have stolen your identification, your ID, they actually compute a fake tax return with all these favored deductions and credits, and it has nothing to do with reality. They're making up a lie. They're submitting it using your fake ID. They get the money, and the IRS in the past has been paying it. And those of you that have already filed know that they're looking for an additional type of identification. And so that would be any federal or New York State ID, valid ID, so that and what we put down is, yes, this person's sitting in front of us.
Right.
Or if it's brought in, maybe a parent's bringing in a kid's return, we believe that this is correct information. So they're getting a corroboration. They're getting the second form of ID and corroboration from the accountant that says this is a real person. So then the IRS and the state of New York is inclined to process that return. But if they think it smells like a rat, or they don't think that something's right, or they think that this might be a bogus return, they may send you an audit thing, and you have to prove it before they're going to release the funds.
Yep. The sad fact is that's where we are today. There's so many people that are stealing IDs.
It's so easy with a computer. You got a computer processing it, you got a computer sending it in, and the computer says, well, this looks real, but it's not. And so, the only other option they have, if this doesn't work, is to let it be tax season and then process these things after all the returns are in at the end of summer. So we don't want that. So you got to make sure that it, like Tiffany says, if you've gotten a disallowance letter, pursue it, because what they're saying is maybe you shouldn't be getting this credit because of one thing or another, or maybe the child was claimed by somebody else. Pursue it, and if you need help, EG Tax will help you.
That's right.
Now, we wanted to talk about credits today because a credit is different than a deduction. A deduction is multiplied by your tax bracket.
Correct.
But not a credit.
That's right. It's totally different.
They give you the money. It's 100%.
Cool.
So if you have a credit, like for instance, I did a plug-in electric vehicle credit today, which was $7,500, and it's $7,500 that came off of his tax bill.
That's really cool.
Right. So but we're going to talk about the different credits. And again, if you have any questions, 803-0930, 803-0930, star 930 on a cell phone. And we're going to go to our phones first and talk to Peter in Cheektowaga. Hey, Peter.
Hey, Esther.
What's happening?
Question on savings bonds. Excuse me. As we know, when they cash them in, you have to pay on the interest.
Right.
But can you pay, is it like a straight percentage, like, 25% or whatnot?
No, here, Pete, how much income do you and your wife have approximately?
We're close to about $70,000.
All right. Is that including Social Security or not including Social Security?
No, not including.
All right. So is that $70,000 taxable?
Yeah, it would be.
All right, so that would be 25%, because if you're married filing a joint return at $70,000, it'd be 15%. So if you cashed in and had $10,000 in interest, you're going to pay 10%, 15% on if it's $10,000. So that'll cost you $1,500 in taxes. The great thing to know is it's a subtraction on New York State.
Oh.
So it's taxable on the federal only, but it's a subtraction on New York State
Oh, I see. Okay.
as a federal obligation.
All right. Okay, well, thank you very much.
Thanks, Pete.
Okay, bye.
Have a great day. Bye-bye. So, and that's what people have to understand is there's all kinds of additions on New York State
Right.
and all kinds of subtractions. One of the additions is the 414H.
That's right. That's right. That's an addition. That's if you're a New York State or federal New York State pension holder, you have to contribute until you're vested in New York State, and that's an add back on
Right,
the
the
state.
414H is an add back.
But like Pete was talking, that's a subtraction, what he pays in interest for the U.S. savings bonds on the federal.
Right. So if and another add back is if you have municipal bonds. Let's say you got an Arizona municipal bond. It's tax free on the federal, but it's an add back on New York State because only New York State municipal bonds are tax free.
That's right.
Right?
So if it was a New York muni bond, it would be a subtraction.
That's right. All right, let's go back
Not
to the
taxable.
phones. We're going to talk to Mr. Bill in Middleport. Hey, Bill.
Hi, how are you this afternoon on this nice snowy cold day?
I know. Well, hey, we knew. I mean, I knew we'd get more snow.
Yeah.
But it was still wonderful while it lasted.
Talking on the bonds and everything, I think it was double E series bonds.
Uh-huh.
Do you have to cash them all at once?
You can cash them whenever you want.
There's
Let's-
a point where they don't
Where they
keep
don't
interest.
right.
They're
when
not
the
earning.
interest is stuff once they're matured has stopped. You want to make sure. I would think you'd want to cash it in, but you don't have to.
Yeah, okay. That's what I was always just looking at. And what I'm really calling about and reverse mortgage and everything.
Yeah.
My wife and I are up in that dinosaur bracket and everything, and what I'm looking about is getting a reverse mortgage. I know a lot about it because I've been studying it for a few years and that before I did anything.
Mm-hmm.
What I'm concerned about is my wife and I, we don't have any children.
Right.
Okay, how does that affect the estate if we got a reverse mortgage and we both died at the same time?
Well, I mean, you're going to find there's a life insurance component to the reverse mortgage.
Okay.
Kind of like MIP. So in the event that it goes underwater, believe me, the bank is covered. They have insurance on any negative equity on the house. So once it's sold, they would just call up that insurance policy against your life, and they would be made whole.
Oh, okay. Because what I was concerned about in that, we do have some cash still in that, and we're going to be leaving that, but we're not going to leave our house to anybody. We're just going to leave it blank.
Well, the whole thing is, you're going to take monthly money, or are you going to take a lump sum of money?
Lump sum.
Okay, that's cool. That's cool. You can do that. It really gives people an opportunity when they're a little older who are on fixed income. They can't work anymore. You got equity in your house. You'd like to have some extra income. If you can release that sacred cow, that house of yours, and you and realize you are entitled to live. A reverse mortgage is tax-free money, and it really is a great opportunity for the right person to be able to be set free
and stay in their house.
and stay in their house forever. Yeah.
Okay, because that would be paying for our taxes and everything. If there was anything left over, just let somebody else have it.
That's right.
And because I know I don't get the full assessed valuation, and I know there's deductions to be reduced from that because of closing costs and all of that.
Right.
And that's what I was just kind of...
Okay, Bill. Well, thanks for calling.
Okay, thank you.
Have a great day. Bye-bye. I'm Esther Gulius, the tax lady from EG Tax, 8030930, 8030930, star 930 on your cell phone. I know we have callers, Anita, Tom, and your calls after the break. We're going to take a short break. We'll see you on the other side.
This is that blonde lady.
This is like a wild winged dove. Am I right? Isn't it a wild
It's
winged
the
dove?
blonde lady.
No,
Stevie Nicks.
Stevie Nicks. Long blonde hair.
but this is wild winged dove, right?
Edge of 17.
Who? Anyway, I don't know. She says wild winged dove. I know she does. Anyway, I'm Esther Gulius, the tax lady from EG Tax, 8030930, 8030930, star 930 on a cell phone, and we want to help you. And we've had Mr. Tom waiting for so long. Hey, Tom.
No, I wasn't waiting so long.
Oh, you're so sweet. What's new, Tom?
He is from Freedom.
She made that band.
She made that band.
Oh, you like that music.
She was with the band?
Stevie Nicks.
Stevie Nicks, yes.
Yeah. I had my taxes done with your friend Karen at your home office.
Karen's wonderful, isn't she?
Oh, yeah. She's been great. But I have something recent that happened.
What happened?
Is Social Security disability taxable?
Maybe. Do you have any other source of income, Tom?
Yeah, after I get, and I don't mean to say the word, after what happens with the divorce coming up next week, we'll see how that.
All right, so let me explain how Social Security is taxed, whether it's disability or SSI or SSD. If half of your Social Security added to all your other taxable and non-taxable forms of income exceeds $25,000 if you're single, $32,000 filing a joint return, then the excess over that floor, 25 or 32, is half taxable until it reaches 85%, and then 85% of it can be taxable.
Okay.
So I guess
was this just like a quiz, Tom?
No.
So I guess it matters what your other income is.
What is your other income, Tom? I don't need to know what.
Are you going to get
much?
part of the pension, of her pension?
Yeah, she's getting almost half, so I'll be left with
She's getting a quadro.
plus what I'm getting, so it'll go over 40.
So do you have a pension, Tom?
It'll go over 40, he said.
So your pension's 40?
Currently, yeah, just a dollar under.
All right. So, and she won't be taking half of it, though, will she?
Almost.
All right. So let's say that your pension next year is 20. Do you have any other source of income except for the Social Security?
No, and I can hardly walk, and we won't get into that.
So if your Social Security that you're getting is like what, $2,200 a month? How much are you getting?
They told me $2,300. Yeah.
All right, so $2,300 a month. So so half of that is going to be, let's say, $15,000. So that's $35,000. And next year, if you're single, the floor is going to be $25,000. So $5,000 of that will be taxable.
Hey, are you under the age of 65, Tom?
Oh, yes.
So I'm thinking disability pension, but he
won't get an earned income credit. You don't have kids at home, do you, Tom?
I'm sorry?
You don't have children at home, do you?
Oh, no.
Okay. Yeah, so I think you're looking at probably about $5,000 of your Social Security becoming taxable next year.
Oh, that's not too bad to deal with.
Okay?
Right.
Just wondered where I was headed.
Okay, Tom.
All right, thanks.
Stay well. Bye-bye, and warm.
Great.
Thanks for calling, Tom. I'm Esther Gulias, the tax lady from EG Tax. 8030930, 8030930, star 930 on a cell phone, and we're going to go to Anita up in Lewiston. Hey, Anita.
Hey, I wanted to call in to get your opinion on a few things.
Uh-huh.
Because I get varying opinions.
Okay.
I'm an extreme couponer.
Okay.
And our household generally donates between $6,000 and $7,000 a year in food product to local charities. And I want to get your opinion on how we're writing this off. We can, I'm assuming, take the value of the product.
As a charity?
To the charity.
Okay, so here's the thing. In order to take a charitable contribution, it's the lower of your cost or fair market value. So if there's no cost, then there's no deduction.
Okay, now, can we write off, I'm saying we because there's a group of us that do this, can we write off our mileage or the cost of the coupons that we assemble while doing this?
All right, so here's the thing. If you guys are a philanthropic group and your whole thing is to you're doing this because you want to bless these other ministries, etc. Mm-hmm. The cost of driving anytime you're doing charitable work is going to be deductible, plus the cost that you would incur to put things together so that you can give it, you know. Right. Like if you so it comes down to cost or fair market value, whichever is lower. And so you have the only cost you would have would be your peripheral stuff. So I can't see that would be a problem. But again, you'd have to prove it. I'm sure that charity would back up the fact that you guys are giving them all this food.
Get letters or things like that,
right.
Stating the value of what we're donating.
Right.
So I just wanted to make sure we were on the right course with this. Is there any other taxable, anything that we're overlooking possibly that we could be claiming?
Well, I mean, any time that you're doing something for that's a wide thing. There's a million things that you could be doing, but if you're zeroing in on charity, maybe what your group might want to do is start its own 501c3.
Okay.
So that you could actually contribute your own cash. Your time is deductible, but you could start your own not-for-profit, and then you could take donations from people, so that would offset some of your expenses, and then some of your own gifts that you might give in the form of cash would also be deductible. So it all depends on how much you guys want to invest in this.
Now, as far as doing it on our personal taxes, though, is there a dollar threshold amount that we would have to reach? Or a percentage? No,
you can't take more than 30% of your income as a charity if you're giving non-cash things, or 50% if you're giving cash contributions.
If it's more, it flows forward, carries forward.
Carry it forward for 5 years. But the whole thing is you want to make sure that you can substantiate that deduction, because many times people had a client that came in the other day and she said, well, just give me whatever you think I can get, and whatever's
said, no
there.
ticky, no
and
washi.
I said, no, it's got to be something that you can substantiate, and that's what's so important. If it's more than $250 in a day, you have to have a written documentation from the charity that you've given that donation to that substantiates the deduction, or a check. You need a third party that's going to a second party that's going to verify that this went to a qualified not-for-profit.
Yeah, we're doing that part, so I think we this covered. Okay.
Thanks, Anita.
Bye-bye.
Bye-bye.
Interesting question.
Yeah, I'm Esther Gulius, the tax lady from EG Tax. We want to hear from you. What any of your tax questions? We got Phil in Tonawanda. Hey, Phil.
Hi, how you doing?
Good.
We got a different scenario here now in my life here. My wife last year retired.
Okay.
In January, but she didn't get any health care, didn't take any health care from February all the way through December, actually.
How old was she, Phil?
She turned 65 just this March.
Okay. So she wasn't on Medicare?
Yeah, Medicare. So
she was. Okay.
Just turned it this month. So she got her Medicare this month,
but not February through December.
Right, not February through December. Then she has Social Security, which is now when they figure out your Social Security, they figure it out with what you get before they take out, or
it's the gross amount.
The gross amount, okay.
Right?
So before.
It's your gross amount. So the Social Security portion, the Medicare portion, is a potential itemized deduction for medical.
Okay. So she normally would get got $1,186 a month. That's before the medical, and she got a Vantage plan too, which that figured in 66 on top of her whatever Part B.
Okay.
Now I get $1,497 before they take out for the Part B and the 66 for an Advantage plan. Now I had insurance all last.
But what's the question, Phil?
Okay, well, the question is how much is all going to be totally taxable? Because
all right, the gross amount of your Social Security for you and your wife, all right, is what's considered potentially taxable. Do you have any other source of income?
Well, let's see. She gets $202 a month for pension.
Uh-huh.
You know, and she gets $600 a month from her ex-husband through his military pension.
Uh-huh. Anything else for you?
No, I'm just...
All right, so you guys are not going to pay any taxes on the Social Security.
Okay.
Because when you take your taxable income, your gross income that's taxable, 10.6, and you add it to half of your Social Security, that figure is not going to come up to $32,000. So you're not going to pay any taxes.
You don't have to file.
There was
And
one
you don't have to file.
in January, though, last year.
What was in January of last year?
She worked for 1 month.
How much was that, Phil?
I'm guessing around 5,500.
Okay, well,
She's going to want to file
so
to get her
you
withholdings.
you got to file to get your withholdings. It doesn't look like any of your Social Security will be taxable, but without all without the straight stuff completely, I can't tell. But it looks like you guys aren't gonna owe any taxability on your Social Security.
Okay.
All right.
But she will owe under that healthcare thing, right? Because she didn't have healthcare for 11 months?
Well, it looks like you're going to have an exception to penalty for that because your income's so low, although they get the Social Security. You know what you should do, Phil, is why don't you email me through my website. Go to egtax.com, ask the tax lady, give me all of your scoop, all your direct information, and then I'll figure out stuff and I'll email you back.
Because I think there'll be an exception to penalty.
It sounds like there's an exception to penalty.
Sounds like it.
I was just getting things all together because on the 22nd I am going to see you.
Oh, well, hey, Phil, then never mind. I'll talk to you in person.
Ah, that's
Okay?
so cute.
I'd be ahead of time, so I make sure I got everything.
Ah, you're good to go. And I got a break for news. But thanks
I
for calling,
love
Phil.
that.
Thank you.
That was like when you were at the airport. People kept saying, I'll see you soon.
Oh, that's true. I'm Esther Gullius, the tax lady from EG Tax. We're going to take a short break for news. We'll see you on the other side.
Here comes the sun, doo-doo-doo. Here comes the sun, I say.
It's all right. I like that. Here comes the sun. It was more like here comes the snow. I'm Esther Gullius, the tax lady from EG Tax, and we want to help you. 8030930, 8030930, star 930 on the cell phone. I got Tiffany Fabian with me. All of our offices are open 9 to 9, not tonight, 9 to 5 tonight. On Sunday, our two mall offices are open, McKinley Mall and the Niagara Factory Outlet. So if you absolutely got to do business on Sunday, we can help you. And the rest of our offices are open 9 to 9, Monday through Friday. Monday
and then
Friday.
towards the end of tax season, there'll be some open 9 to 9 on Saturday,
Except
too.
not on Easter because we're not doing that.
Right.
All right, let's go to Tom in Lackawanna. Hi, Tom.
Hello.
How can we help you?
Yes, getting back to the Social Security.
Yes.
Potential of having to pay federal tax on 85% of your Social Security benefits.
Yep.
How is that 85% computed? Is there a reason?
I mean, that's. I just told you. You add half of your Social Security to all of your income, including non-taxable income, like it might be from municipal bonds. You take that answer. You
exempt dividends.
Tax exempt. Mm-hmm. You take that answer, subtract the floor of 25,000 or 32,000 if you're filing a joint return. The answer then is half taxable, and until it gets to 85%, and at 85%, it's flat.
And it's taxed at your tax bracket, and it's tax free on the state.
Right, but it's tax free on New York State.
Does that answer your question, Tom?
That wasn't my question. Why is 85%
the floor? Because
that's the way it is. They stop it at I didn't make the law, right? I only tell you what the law says. I mean, maybe they'd like to make it 100, but
I've paid.
I do know this, that they said because
my employer paid in and got a deduction.
For what?
For his share of half of my Social Security tax. The employer pays half, and the employee pays half.
Uh-huh.
So how do they end up grabbing 85%?
They don't grab 85%. Some people pay zero. Because if all you have, let's say that you have Social Security.
I'm talking about the people that get stuck with the 85%.
Mm-hmm. Okay, well, Tom, I really don't know. And
yeah,
I mean, I don't know how they came up with that. They came up with that the $32,000 and $25,000 floor. And there is obviously a cost that you paid.
Yeah, so there's no math behind that 85%.
There may have been at some point in time when they came up with that, and I think it's been about 20 years now. Maybe I'll Google it if I get time this weekend and find out.
It just seems like it's egregious for people. They have to pay that after paying all that Social Security tax over.
But if you really take a look at it, Tom, people are getting back way more than they paid in if they live a number of years past retirement age, because they're getting $25,000 a year in Social Security, and if you take a look at what they paid in with their employers over the years, they're actually getting back more than they paid in. But you are right; they did pay in, and a lot of people don't pay on their Social Security at all. So, but I thank you for calling.
That 85% is a little too high.
Okay, Tom, you can call your congressman. Who would be your congressman?
All right, will do.
Talk to you later. Bye-bye. Yeah, I mean, nobody likes paying taxes, but it is true. It's a reality that people have to deal with, especially when you're retired on Social Security.
Yeah,
and if that happens, you're not a happy camper.
Yep, you told me they always have the right to change the law and adjust the law, and you've seen, with Ross, you've said someday.
I never know what they're going to do.
Yeah.
And then we got Congress talking about changing. So you got Obamacare, and they're going to change Obamacare. They're going to change the taxes. So we'll just all hang on. And we're going to talk to Mr. George in Niagara Falls. Hi, George.
Hello.
How are you?
No, I'm a little disappointed.
Why?
Because we pay 85% up to in Social Security.
No. Why, George?
Hello?
Yes, George, I'm listening.
Oh, okay. Monday they told me they're taking me from full-time to 3 days part-time, taking my health care away.
Oh.
And that's going to screw my taxes all up.
Well, not necessarily, because I think you're going to find that shortly, if not very shortly, all the penalties for Obamacare are going to be eliminated.
And then if you don't make a whole lot of money, there's something called the Essential Plan that's like $20
that might be
a week.
Something that you might want. How much are you going to be making now, George?
Well, I'm going from like 60,000 down to probably 24.
Okay. Do you have children at home?
No.
Is it just you yourself?
No, me and my wife.
Does she work?
Yeah, she's an X-ray tech at St. Mary's.
Okay. So can you get on her? Well, first of all.
Well, no, we've already talked about that.
Okay. But first of all, I think you're going to find that the penalty with Obamacare is going to be eliminated. If it hasn't already, I know that he wrote in an
executive
order stating that no one should be harmed by Obamacare, and I think they're in the process of undoing Obamacare and the penalties, as we speak. So I think that's the case.
On Tuesday, now I'm working Monday, Wednesday, Friday.
Yep.
Drive tractor trailer to Syracuse, and Tuesday, Thursday, I'm off. So I'm taking vacation or sick time and vacation time. I got about 19 months to go through that. But this letter I got in front of me says, what is COBRA?
COBRA is what the employer paid on your behalf for health insurance, which they allow you to pick up and pay yourself, and it's really cost prohibitive. But I'm going to tell you something. We have a healthcare navigator that works for us at our corporate office right on Niagara Falls Boulevard, and we do not charge for this. It's a free service for you or anyone else listening. Just give them a call. It's either Tim or Karen, and they'll be very happy to show you what's available through the New York State of Health. And
I'm wondering if you would qualify for the Essential Plan, George.
No, I haven't talked to anybody.
No, but I'm just saying, give them a call at 632-7886, and it may be in his best interest to file separately.
That's right.
Wife,
that's right.
And go with another form of health insurance. So that's the best I can give you, George.
Call our office, George.
My question is that this letter I got from work, can they just pull me out of the middle of the pile, halfway down the seniority line, and then just...
George, you know what? I do not know. That's something
do
that
you have a
take
union?
Up with your union guy. But and I feel sorry for you. But again, if you need any help, give us a call at 632-7886. We'll be very happy to help you. And maybe solve your medical problems, but I do think Obamacare is going to be repealed. I'm Esther Gulias, the tax lady from EG Tax, 8030930, 8030930, star 930 on a cell phone. We were going to talk about credits, but let me take Winnie before I go on to the other calls. Hi, Winnie.
Hi, Esther.
How you doing? What a cute name.
I'm baffled.
Why?
My mom died in October of 15.
Okay.
I was left her house, and she had 2 IRAs.
Okay.
I received those in 16.
Okay.
It was a total of $52,000 on the 2 IRAs.
Uh-huh.
They took out $8,000 in taxes out of those.
Okay.
I received $26,000 in Social Security and $32,000 in a pension.
Uh-huh. So you're going to pay 85% of your Social Security. Okay.
When they added those IRAs onto my income, it came up to like $102,000. And from what I gather so far, I'm going to owe $5,000 in taxes. Is there any way around this?
All right.
Can you put money into an IRA?
Are you working?
No, I'm not. I'm retired.
Okay, so that takes care of that. Well, for those people that are not in Winnie's position, if you are inheriting an IRA as a beneficiary, you have 3 options. You can take it all like Winnie did. You can spread it out over a 5-year period, or you can spread it out over your life expectancy. Okay, so those are your 3 options. Winnie chose to take the whole thing. So unfortunately, there is no lump sum that you can do. It's just going to, and when you add your Social Security on top of it, it just ends up to be a double whammy. So aside from, and anything else that you could have done needed to be done before December the 31st. Tiffany was alluding to the fact that maybe you could have put money into an IRA, but you didn't work, so you can't do that. So it sounds like you just have a problem.
Winnie, is your $32,000 pension a government or municipality pension by any chance?
Yes, it's a New York State pension.
So that's tax-free on the state.
So then,
Social Security's tax-free
so then
on the
she
state.
can back away $20,000 of the pension from her mom on the state too, right?
Right.
So don't forget, Winnie, that $20,000 of the mom and your pension is tax-free on the state.
Okay. Now, I took that money from the IRAs, and I paid off my mother's bills because I was the executor.
Okay, well, they should have done that before they distributed. So
They told me that. They told me I was the beneficiary, so I got the money.
Right. Well, unfortunately, now did you pay medical bills for your mom?
Minimal medical bills. It was mostly she had a home equity that had to be paid off, and I paid up. With that, I used to pay her benefits, her charges in her assisted living.
Yeah. Well,
medical.
Assisted living doesn't have much medical component.
Right.
Well, it sounds to me, Winnie, that you're between a rock and a hard place.
You inherited the house.
For those people listening, before you take the money, why don't you give us a call? We don't charge. Because unfortunately, after the fact, there's so few options that you have. I mean, itemizing.
You inherited the house.
A little bit.
Yeah, because of mortgage interest,
right.
property taxes from your mom and yours, you know.
Yeah, it's not in my name yet.
But you are the
Assumed.
heir. Are you not the heir?
Yes, I am.
All right. And did you pay the property taxes?
Yes, I did.
So that ought to be something. So I think the best thing you can do is look at everything you can itemize.
Right.
But you really are between a rock and a hard place.
Okay, so I can take off her house taxes that I...
Because you are the heir, and you paid it. It is your obligation paid with your money.
Okay.
Okay?
Good. Okay, so...
Thanks, Winnie.
I can take $20,000 off the top of the IRAs.
That's exactly right. Now, the pension you got was not a New York State pension. It was an IRA, correct?
For my mom?
Yeah.
Right, it was an IRA.
And your pension is New York State, right?
Yes, correct.
So your pension is 100% tax-free. Your mom's first $20,000 is tax-free.
On New York.
On New York.
Okay, how about federal?
No, fully taxable.
Okay. My mom's too?
Yep.
Yeah, your mother's, the first $20,000 you have in pensions that are non-New York State or non-municipal, that's all you can take is $20,000 for all of those sources.
On New
Your
York.
New York state pension, though, is going to be fully tax-free on New York.
Right.
Okay?
Okay, thank you so
Thanks, dear. Bye-bye. I know it's sad. Sometimes you sit with people and you go, oh, why didn't you call me before?
Correct.
But, of course, on the bright side, I hope she has a home that's completely
right.
paid for. It's an asset. She's not going to, she can sell it and she'll, if it came
Stepped
through
up
the estate,
basis.
she's got a stepped up basis. That won't be taxable. So, I guess you got to look at the glass as half full, not half empty.
That's
Although
right.
none of us like to pay, right? But sometimes you have to. And let's go back to the phones. We're going to go to Mary in Niagara Falls. Hi, Mary.
Hi. Thanks for taking my call.
Yes, what can we do for you?
Well, I had a question. I was looking at the income brackets for the 2016 tax return, the rates, and I noticed it says single, and there's usually single, married filing joint, head of household, and married filing separate.
Uh-huh.
And under married filing joint, it has a /widow. I've never saw that before.
Well, because in the year of the death of your spouse, you would file a joint return.
Oh.
2 years after the death of your spouse, if you have children that are still dependent upon you living in your home, you get to file as qualifying widower, which is the same tax rate as if you were married filing a joint return.
But that's only up to 2 years.
2 years. And then the third year, you would go, if the children are still in your home as dependents, you would then file head of the household.
Oh, okay, great. I just never noticed that before.
Well, for somebody that likes to look at tax forms, you just learned something. Okay?
The tax rate always confuses me. When it says the tax rate is 10%, then it has like from $1 to 275%. Is that adjusted gross, or is that gross income?
Taxable.
Page 2 of the 1040.
So it's, let's say that you had $10,000 in salary.
Okay.
And $10,000 in a pension. So your total adjusted gross income is 20. But then you go to page 2 and you take your standard deduction and your personal exemption off from that, which is about $10,000. So all you have left is about $10,000 taxable. On that, you're going to pay 10% on the $10,000 or $1,000.
And something really cool, Mary, if you're in the 15% tax bracket and some of your income sits in 10%, some of your income is taxed at 10, and
the
only
rest-
the amount that lops into 15 is taxed at 15.
Right. So just in case people think that, oh, I don't want to get into the next tax bracket, let's say you're $2 over in the next tax bracket. So let's say you move from 10 to 15. That means the $2 is taxed at 15%, which is 30 cents. And the rest of it is taxed at 10%.
Pretty cool.
Yeah, that's all right.
Okay?
Right. That was it.
Thanks, Mary.
Thank you.
Bye-bye. I'm Esther Gulius, the tax lady from EG Tax. 8030930. 8030930, star 930 in a cell phone. We got other people calling. We'd love to hear your phone calls, but wanted to talk about some of the credits that are available that you don't want to miss. First of all, there's the additional child tax credit.
Yep, that's right.
Which means that you have children that are your dependents living in your home
Under the age of 17.
Correct? And you get $1,000. You get their personal exemption, 40/50, plus $1,000 credit. Now that means you really get $1,000 in your pocket.
That's right. That's right.
Now, if it wipes out all of your liabilities, so you have no taxes, that's when you get the additional child tax credit. And if you had 4 children under the age of 17 and you had no tax liability because of your itemizing and personal exemptions, then you'd get an additional $4,000 in your pocket.
That's right. That's right. Yep, I did somebody the other day, and that's right where she was. She paid in so much, but she got everything she paid in plus an extra $3,000.
And that's what people don't understand is, in many ways, our tax structure is not just income taxes paid; they pay you. So it's kind of a welfare situation.
Yep. Social program.
Social program, right. Adoption credit. If you adopt a child, up to $13,460 of the expenses you pay for the adoption is a credit. They're going to give you back $13,460. If you adopt a special needs child, they give you the $13,460 even if you didn't pay a dime.
Yep. And special needs kids is a very broad spectrum, too. There's some kids that have a slight...
Special sibling group.
Yep.
Like, for instance, you might have a pair of twins.
Right.
And they don't want to split the family up.
Yeah.
Right?
So that's a special situation.
Right. And so you would get, if you adopted those babies, you'd get $26,800, almost $900 back in tax savings.
Right.
Of money that you didn't pay in.
Yep.
So I know everybody's going to go down and adopt. That's what that poor lady could adopt some kids. Let's see. We're going to go to Tom, who's waited so long. Hey, Tom, how can we help you?
Oh, yes. I made $20,500 in Social Security and, let's see, $8,400 in pension.
Uh-huh.
Do I have to pay any tax?
No. Did they take any money out of your pension?
No.
Then you don't have to file, and there's no tax liability on your Social Security.
Okay, thank you very much.
You're welcome, Tom. Thanks for listening. All right, we're going to go to Debbie. Hi, Deb.
Hello?
Hi, can we help you?
Yes, question for you. If there is a chance of an offer as far as a lump sum, if you're involved with a workers' comp case, will that be taxable?
No, because workers' comp is fully tax-free. Workers' comp is tax-free.
It's tax-free?
Right.
Okay, that's all I needed to know.
All right, thanks, Deb. Bye-bye. And the other thing that's tax-free is pain and suffering. I mean,
That's
if you, like, let's say you were in a car accident and you broke your leg and they gave you $100,000, that also is tax-free.
If it was lost wages, it would not be tax-free.
That's exactly right. And let's go to Joe. Hey, Joe, how can we help you?
Yeah. This is the first year that I ever had to pay the federal government.
Okay.
And so you're going to pay them by April 18th.
And so your question is, Joe?
My question is, on that Obamacare penalty, exactly how much is that penalty?
Did you not have insurance?
No, I didn't.
How much is your income, Joe?
I had $24,000 on my security guard job.
Okay.
And then I had $15,000 in Social Security money. And then as an independent contractor for delivering medications for Omnicare, I had like $9,000.
Okay. So did you do a Schedule C?
I already did the taxes there on Kenmore in your office.
Okay. And so you owe money.
Yes, I owed it.
All right. Did anybody talk to you about possibly putting money in an IRA?
No, at this time, because I separated from my wife and I was paying 2 rents, and I left her in June, so I ended up filing
separate. Is there any way the two of you guys can file jointly?
I don't think so.
All right, so there's no way you guys can reconcile long enough to do a joint tax return. Do you have children?
No.
Yep. But anyway, so I thought possibly you could get out of the Obamacare penalty.
I was wondering how much your net was for your independent contracting job, Joe.
$9,000.
That was your net after your expenses?
Did they take all your expenses for travel?
Yes, I deducted all my miles, the tolls.
Okay.
When they do the payroll, they charge me $35 a week.
I'm wondering maybe if you give us a call at the office, I could just look at it.
Look up your tax return. If you call us at the office, Joe, then we can talk to you specifically about your particular situation.
And we have 2 healthcare navigators there, so call me at the office.
Let me give you the phone number, Joe, 632-7886, okay?
Wait a minute, 632...
7886.
7886.
All right, thank you, Joe.
Obamacare penalty there, about how...
I know, but this way I can look it up and see if they even computed it, and if they did, if they gave you the exception. Okay?
No, he said I wasn't eligible.
Just another set of eyes is a good idea. Please call.
And the other thing is, this way we can find out if you were under a hardship. So give us a call, okay?
Okay.
Thanks, Joe. Bye-bye. And let's go for Elaine. Hi, Elaine. How can we help you?
Yes, I'm calling Esther. I have a question on a 1099-B that I received.
Okay, that's sale of stock.
Okay. On there, on I don't understand what is non-covered security.
That means that they didn't keep track of your stock basis. So it's not covered. In other words, covered securities means that the stockbroker kept track of your cost basis. Uncovered means that they didn't keep track of your stock basis.
Okay, if they didn't keep track of that, and I have no way of knowing that, how do you report that?
Then it's all. If you have no idea what your basis is, it's all fully taxable.
It's all fully
unless you inherited it.
Right. So you have to determine your cost basis. And again, what I'd suggest you do is if you want to call us at the office, we can go over all the particulars.
Okay.
But
I was at one of your offices about a week ago, and the girl told me she didn't even know how to do this. It was through the sale of when First Niagara was taken over by KeyCorp.
See, but you're going to have to go back to your records and find out what you paid for your First Niagara stock.
Okay, initially when I bought it?
Yes. And all your reinvested dividends. I mean, if you want, go to egtax.com, go to Ask the Tax Lady, give me all your particulars. I'll send you a list of how to go about it. But it's up to you to do it. We can't do it for you. You have to go through your records. Okay?
Okay, and so all right, if they sent me on the back of the form that I received, they wrote down like the amount of the shares, and they had like a date next to it and an amount. All
right, I don't see it. So if you want to take a picture of it and send it to me, I'll be very happy to look at it. I can't do it through the radio though. Okay, Elaine?
Thank you.
Thank you, dear. Bye-bye.
Bye.
I'm Esther Gulyas, the Tax Lady from EG Tax. Give us a call during the week if you need the best tax help. Have a great week. I'll see you next week. Bye-bye.